These guys.
Well, everyone, welcome to this morning's edition of the FBC Markets. Morning call. It's the 29th of July. Stock exposure broadened overnight. We didn't really have a huge amount of movement in terms of the actual index. However, the AI and chip stocks were hit, and we've sort of all of these uncertainties that have been bubbling along in the background for ages. Now all of a sudden matter for some reason. So we started pretty poorly yesterday with the KOSPI being down 11%. Its largest drop. What was its largest drop in 5 months? Samsung was down 13. SK Hynix down 14. We got earnings for SK Hynix this morning in about an hour's time. It's 9 a.m. Sydney time now. But adding to this as well, there was an earthquake in Japan, and we'll get to that a little bit later, and I'll go into that. But overall, Nvidia was obviously flat, but there was some their credit default swaps actually jumped last night to a record high of 85 basis points, and there are the single largest day move since that contract began trading. And these are just on reports of 750 billion in total AI infrastructure deals, including 250 billion in that finance guarantee for OpenAI, and then 540 odd billion in circular deals. So a circular economy starting to be of concern, and Nvidia, I guess, tying itself to to lesser grade projects or companies, and probably affecting its credit rating in terms of that. So Nvidia is only really down 5%. Over the near term, but we also had Oracle downgraded to BBB-, and obviously Alphabet. That negative free cash flow, which is doing the rounds on social media, as well as obviously their forward PE being quoted as 20, but if you take out investment gains on Anthropic and OpenAI, it's more like 43. And that negative free cash flow, that's the first time they went in a negative free cash flow since they've IPO'd. So it's a pretty big deal, and it's a massive bet. And not to say it's not going to pan out, but certainly the company is now riskier than what it was in the past. So obviously Micron followed them down the bottom left corner there, and in the middle there you've got those the data center exposed industrials and product manufacturing industrials like Lam Research, Caterpillar, who do the diesel engines, GE Vernova, who do the power, and AMAT, which is a chip manufacturer. So as you can see, when I've meant about the broadening, the Dow was actually up nearly 1%. The S&P was up slightly at 0.2, and the Nasdaq was down. And look, we're going to, and I think significantly after the bell, I think the Nasdaq will likely be heading lower. It's down about 0.6%, because oil has rallied 5% in the aftermarket as the US has intercepted what was initially reported as a ballistic missile attack, but it's fairly unconfirmed at this juncture. But WTI is up 4.65 since the close, and so that really does. That was the worst 3-day stretch since 2020 for oil. I think there's a fair bit of manipulation going on there, and everyone was super hopeful, and they're super hopeful until a ballistic missile comes screaming over their heads. So oil's still up. Oil's still up like 30% plus year-on-year terms. Eurozone and UK importers are paying way more than 30% than a year ago. So look, inflation is real. Obviously, we did have a little bit of corporate news. Coca-Cola was up 5% because of the FIFA World Cup, drove 5% quarterly volume growth. Boeing actually beat on top line, and 0.6 billion positive free cash flow for the first time in ages. Boeing's been a bit of a turnaround story, and I think that's one massive step in the right direction. Investors would be very happy with that. Overall, we are. Look, we're just waiting on these hyperscalers. So here is the big concern for us, and it is a massive one. I mean, those moves in the KOSPI, and I wrote something for the Ausbiz newsletter yesterday. You know, everyone goes, oh, the Korean market's crazy, the Korean market's crazy. But look, to be brutally honest, we've got retail, retail margin lending balances. This is balances. So with brokers went over the 1 trillion mark. And that is, they owe 1 trillion potentially that they can be margin called on. So if this thing spirals, you think Korea's bad. And everyone always says, well, we've got institutional support, yada yada, in the US. Well, fund managers at the moment at 3.6% cash, 4% is the sell line of cash. There's no one's there to buy the dip. They've allocated an absolute crap ton of money to this increasing bond issuance from the hyperscalers to get all these projects up and running, which are starting to blow out a little bit. So these are these credit worries. They're seeping into the AI stocks. So basically, this is the cost of hedging. So these are the credit default swaps. As you can see, Oracle's at the top there, but they're all pointing upwards. And then the yield on bonds linked to AI companies, like the hyperscalers, are rising really fast. Whereas you've seen the US 5-year Treasury yield actually dip a little bit in the last, in the last period, probably the last 7 odd days, where you've actually seen, the AI companies or the corporate debt start to, continue to just grind higher. As you can see on the left there. So that's what's called, a credit spread. And it basically means that investors are pricing in much more risk in corporate debt to government debt. And, these spreads have been historically very tight because these companies have been cashed up. But obviously, when you're issuing an absolute motherload of bonds and you go into negative free cash flow, like Google did, and like all of them are going to next year, people want to receive more yield for the extra risk, essentially, and that's fair enough. That's how bonds work. Just another quick update, and this is very fringe, but obviously very but very important, just in case. So this is like a less than 1% chance of happening. But we had an earthquake in South Japan. Normally the earthquakes are up more mid to north. Fukushima was sort of that, on that second island of Japan, around that northern part of Japan, sorry. But 7.1, which is pretty heavy, and like, anything above 7 is pretty heavy. And the dead center of, Japan's chip country, and a mall collapsed in Kashima. People have been trapped, 1 confirmed dead, and then TSMC's GASM plant was evacuated. But you can also see down here on the map, to give context of, to give context of how close, Taiwan is, and Taiwan Semiconductors is, not that far away. And the part that actually matters is like, the 2016 quake started with a 6.5, then a bigger. So quakes generally, within the next 72 hours, they do carry risks of something bigger. Taiwan itself's pretty fine, no direct impact, no tsunami threat. But look, no confirmed structural damage is genuinely good news. Just keep your eyes out, because, this is one of these things that, like, this is the world's most important bottleneck. 90% of these chips that are basically the center of all, of all of these, the AI boom, come out of that little island circled in red down there. And this region overall. It's just worthwhile being a little bit careful, because we're 20. I remember back, Fukushima as well. I was trading then, and there generally there doesn't tend to be one quake, and they do tend to be a little bit stronger. So just be wary of that. So crude was down 5%, but we've seen crude bounce 5% in the aftermarket, so basically ended up flat for the day. Obviously that's that reversal is pretty key, and that's going to put we've gone and written off that this thing's going to continue. I still can't find breaking news in terms of like a genuine verified news story. There was some verbal news on Bloomberg where they were still trying to find out more information, but they have. I mean, I'm just having a quick read here. Fresh fighting erupted. Basically, it was an attack on US troops in a base in the Middle East, but it was intercepted. Iran backed militias fired drones at all facilities in Saudi Arabia for a second day on top of that as well. And the Saudi Defense Ministry said it intercepted drones overnight again. And so not quite over just yet. And we'll see what happens. But, as I say, we got CPI today in Australia, very important for and we had a slightly less hawkish RBA governor yesterday. Apologies to everyone. I lost my mind previously. It wasn't RBA yesterday, but as you can see on the calendar there, I've read RBA governor, and because of the amount of central bank meetings this week, so my mistake. I apologise. I should know better, being an ex-short-term interest rates trader, but everyone makes mistakes. NAB expects the trim mean to be around about 3.7%, which is slightly below the RBA's forecast. We've got half-year results due, I believe, for Rio as well, and the SPI was up 70 points, but we're probably going to see a little bit of that eroded overall, just due to this oil movement. So June quarter CPI at 11.30, Rio at 8.30, so that should be largely out. Atlas Arterial Mineral Resources, Northern Star Nickel Industry, I believe that'll be quarterlies, I would imagine. And Fed decisions at 4 o'clock tomorrow morning, followed by Microsoft and Meta earnings. And then we've got Apple and Amazon after that. And that will really, how that go, well, how all five of those things go, particularly in the States, the Fed meeting and the hyperscalers, and how that is just generally taken. Plus, obviously, earthquake watch, is what you need to keep an eye on for the next 2 days. At the moment, we're pretty happy to buy those memory chip stocks. I think they're getting a little bit cheap, and this is just a leverage washout as it stands at the moment. It just may not necessarily be over because margin calls don't take into account fundamentals, and they don't care unless you can refill your account. You've got to get out. So and that margin debt things it's an extraordinary risk if it snowballs, and all you'll need is something to trigger some sort of event, and where we could be in a little bit of trouble to the downside. So very much a risk-off atmosphere, particularly in the MPC office. We're really only holding Chevron and SK Hynix as it stands at the moment, and probably won't be making any major decisions until Friday once we've seen all of this data come out. So and I think that's possible. General advice only, but I think that's the smart way to play it at the moment. I'd be getting out of anything you're a little bit unsure of, particularly leading into Aussie earnings season as well if you're in the ASX. We went through the hyperscalers to hyperspenders, probably a pretty good watch considering we've got the hyperscaler, 4 of the hyperscalers coming up for earnings this week. So at least you can kind of learn and know what you need to be looking at in these earnings numbers, because it's not going to be about EPS, earnings per share. It's not going to be about revenue. It's going to be about cash flow. It's going to be about CapEx. And there's a good little guide there as well. So worthwhile going and having a bit of a look there. Basically, today's the last day. I'm going to hassle you about buy the dip. If you've got S&P index, ETFs, it's a bit of in my opinion, bit of a no-brainer. to sell those, and then and have this strategy on. It's capital efficient. You only got to put down, less than a fifth of the capital that you would have to deploy to buy a US ETF, and optimizes the entry over the next 4-month period up until November. And fingers crossed the seasonality kicks in and we get that Christmas rally. But it's a good product, and otherwise we wouldn't sell it. But you can go to the homepage. But literally, you've probably got till about midday, to be honest. Forms need to be filled out, payments need to be made. Don't miss out on that one, because it's unlikely to run until probably November, I wouldn't imagine, again, unless we get further demand, which is a chance. So anyway, people, thank you very much for listening this morning. Stay safe out there in your portfolios, and probably just keep one eye on the screen just in case. There's a fair bit going on. We'll speak again tomorrow.